The real question is are we going to sort of see the worst of it sooner, or are we going to see the worst of it later?
If Bitcoin tanks to 10K or whatever, why is Q4 2022 one of the quote most dangerous moments in economic history?
Yeah, obviously, there's a lot of dangers out there, and I want to be very clear. There is no easy play right now, right? Just because there's a danger doesn't mean you should throw your money in shorting, doesn't mean you should throw your money in anything really risky right now. And I've been preaching just pure patience for at least 5 months now, which is super frustrating to a community full of people who are really used to actions and activities. And the bull market, I had a tweet about this a couple of weeks ago. I said, your biggest enemy right now is boredom, because the bull market is a dopamine rush. As much as it's a money game as well, it's also a dopamine rush where you end up with so much stimulation every day, and you just don't have that in the bear market. And that is the biggest obstacle to overcome. And you don't realize, like, as much as you wanted the gains, you also wanted the stimulation. You were kind of addicted to that, at least myself. But what happens right now is there is a lot of, this is the frustrating part of the market, where you could have a ton of overwhelmingly bad news and still have these crushing rallies, or you could have a ton of positive news that seem like it's going to give relief and have some major dumps. And that's because the only people left in the market trading right now are the most savage professional investors and traders. And it's just PvP right now. It's headhunting. Wherever there is too much long exposure, it's going to get hunted. Wherever there's too much short exposure, it's going to get hunted. And so what really sort of your average viewer, which I feel like you and I, we both have channels that are people who are long-term, but they're not necessarily professional investors. And so I feel the most beneficial way to do this is to effectively identify the macro change when a new macro market cycle begins. And until then, the best thing to most likely do for the vast majority of people is to sit on their hands and wait. And patience might sound easier than it is. Most people have that desire, that need to constantly, I need to buy this dip, I need to buy this, I need to buy that. And that is actually going to be quite a tricky path, right? If you want to add exposure on big down days or DCA, that's always a fine strategy. But people looking to snipe the bottom and be really aggressive, I think that you just need to respect the x-axis, which is time. Now, what's going on right now? What's going on right now is we have several interwoven crises. We have inflation, right, which was a result of the money printing that happened throughout the last decade plus, but again, went into hyper extreme mode in 2020 and 2021. We have the response to inflation, which is trying to bring those interest rates up, which is actually creating a sovereign debt issue where governments are having skyrocketing amounts of debt. We're also having, like, imagine, so throughout the last decade plus, we had all this cheap debt come into the world. Free money, could take it. This is free, right? We have no interest. And then as you raise that debt value, now not all debt is fixed interest, right? Some debt is variable interest, and there's a lot of debt that there's a lot of consequences of just deciding to make all that debt very expensive all at once, and mix this with a very strong dollar against other currencies, and you have local debt as well as international debt breaking, right? Where it can't get paid back. There's just no way, right? And so the debt markets are starting to reach very, very critical levels. So you have inflation, you have the debt issues going on with essentially sovereign debt. Whereas in 2008, it was individual debt against houses and stuff. Right now, it's almost more at the sovereign, the government level, which is quite interesting. The UK said that, their pension funds, their whole pension system almost got margin called last week, which was a product of this. And so the Bank of England said, okay, well, we're going to start buying bonds to lower the cost of the bonds. A bond market's weird. It's inverted. The higher the percent goes, that means less people are buying it. So high number means less buying. So by buying them, you lower the interest rate. And so the bond market, they said, we're going to step in and start buying these, which is going to lower the interest rate, which stops things temporarily from breaking. But remember, what's the other demon we're fighting? Inflation. So as you're buying the bonds, what are you doing? You're printing money. So it's a really tricky balance right now that the governments are in. And I don't know if you guys follow Arthur Hayes on Twitter, but he's put out some really interesting pieces of writing where he essentially predicted that all of this is leading to YCC, or yield curve control. Now, Bank of England just activated yield curve control, which means they're going to start printing money to buy their own bonds, which is going to increase, like, it's a weird, vicious cycle. But long story is that this is good for Bitcoin. This is good for risk assets. This is good for stuff that trades against the dollar or cash, because the reality is this is going to devalue those currencies over time. It's just how it's going to work. So the question is, when does the Fed blink on their strategy and start saying, we're worried now that something's going to break in the United States? And that's kind of the moment we're looking for. Right now, it's not an easy situation to predict, but we do have a few more variables like the escalating conflict in Europe. We have some very spicy talk out of Vladimir Putin over the last few days. It's really hard to predict where that's going to go, but it seems like that's not going down as much as up, and that you have OPEC essentially saying, well, actually, we really liked the high oil prices. We're going to cut production until they go back up. And it just seems like everyone's kind of ganging up on the United States right now and trying to make things as hard as they can for the West to process this financial crisis, because the West is like so financialized. Okay, so all this is to say there's a lot of negative news, probably the most negative news, like macro news I've seen. And usually when everybody's on one side of viewing things, it goes the other way. It's just like a rubber band. And so that's what I'm going to say is it seems like it has to go down from here. It seems like there's another leg of the bear market down at least. And that would be over time what I would put my money on. However, short term, people looking to take advantage of that and saying, well, I'm just going to short the market, they can end up in a load of trouble, because that's where you get this PvP sort of dog eat dog market where the only people left are those super professional money bags that are looking for those average investors that they can just chop up. And so if you get sort of like someone who's just chucking shorts on, thinking, oh, well, it's going to go down, well, you could get a massive rally up and then you might lose half your money. And by the time you're there, you're like, you know what, I'm going to pull this off. I've lost too much money. And then down we go. And that typically is how most like average investors will end up trying to short a bear market, because it's just super, super unpredictable right now. And so expect unexpected is where we're at. There's no clear trend except overall down. And short term, there could be massive rallies that are super unexpected and cause the max pain. And so it's sort of like hunting max pain right now is what the market's doing. And the other thing that we got to understand is the job market's super strong, which gives the Fed more reasons to keep tightening things up. And the economy is not so bad. Q3 earnings are not so bad. And so like there's this, we haven't really felt it yet, the full brunt of the pain. There's still questions as to whether we're going to have a recession. I mean, the reality is that the worst case scenario is that this takes years more to play out, right? And this takes another 3 to 5 years to really fully reach its bottom, because there's so much like degeneracy in the market and people are so desperate to keep longing and to keep, investing aggressively into sectors that are still needing to empty out a little bit of demand. And so the real question is, are we going to sort of see the worst of it sooner, or are we going to see the worst of it later? I think that the worst case scenario would probably be if the federal governments and the Fed and central banks just start printing a lot of money right now, because that's not healthy. And it's going to cause a lot of problems in the future. Honestly, the best case scenario would be if we get something really brutal in the next sort of 3 to 6 months, and we actually form a bottom and we work our way back up over the next few years. The longer it takes, the sort of probably the more painful it is, because there's the mental cost, there's the boredom, there's the opportunity cost of people who have not had, that feeling of positive growth in the markets in 2-3 years. That can be really debilitating, and once again boredom. But long term, I think this all just leads to a really, really expensive Bitcoin, a really, really expensive sort of risk asset market, and so I'm positioning for that. But the real important thing to do is to take your time, because the x-axis is the one that's going to get you even more than the y-axis right now. And people don't respect the amount of time it takes to change and to cycle through as crazy of a market cycle as we had, not just over the last 2 years, but over the last like 12 years.
Totally.
I got you. So Aaron,
go ahead.
In summation, for like the average investor right now, the biggest uncertainties are how far will the Fed tighten, and then this geopolitical uncertainty with Russia and Ukraine. Like until something changes with either of those, it seems like the trend is only going to push us down. Is that?
Yeah, look, there's a lot going on that the economy needs to repair with time. And, what I'd say is for the average investor, the best thing you could do is a whole lot of nothing. However, you don't want to become complacent. You want to stay engaged, but that doesn't mean you need to stay super risky, right? So what I say is you don't need to risk a lot of money to pay attention. But the main thing is you have two options that I think that are viable. You either take a few plays out, you sit out and you just relax and get educated. You hustle, you try to make as much money as you can and reduce your average expenses. You act wise economically on a micro level, as well as prepare to DCA and to average into things like Bitcoin and Ethereum. That's the average investor's playbook right now. And what you need to know is that this could last a couple of years. It could last quite a while, because we had 12 years of just this wildest growth of the economy that was mostly created by wild amounts of free money. So now that's all coming down to earth, and reality needs to sink in. The real estate market's still completely out of whack with the average, American, right? The median rent in America right now is like $2,000, which is just totally unaffordable for most people. And so you have the economy, and the real estate market needs to kind of like get back in sync, and real estate drives like everything. And then you also have the stock market, which has so many companies which are just inflated to heaven off of, free money, right? And so it's all going to have a weight on crypto. But then there's the other side, which is, as you have these nations that are trying to gang up against the dollar, well, guess what? Nobody really wants the ruble. Nobody really wants the yuan. Nobody wants these currencies. And they need something that is agreeable, that's international, that's, and it just screams Bitcoin, right? It screams that they're trying to find a new gold standard. And so, there's something super exciting about seeing Bitcoin as a potential new rail for oil and energy in the future, maybe not in the next 5 years, but maybe in the next 15. And there's something super exciting about, as the liquidity crisis ends and it turns back to the repairing mode, and financial stability mode, which means money printing. Well, that's going to be great for Bitcoin and risk assets. And so it's really just about timing. Timing. If anyone tells you they know the timing, they're blowing smoke. But what we do know is that it's going to take a while. And so I think that being desperate to call the bottom in the next rally is the wrong mindset. Being very patient and knowing that this could go on a few years, and actually even planning it out and saying, hey, I'm going to set a buy every week for 2 years. I'm going to set a buy every week for 3 years. And I'm going to plan that out. I think that that's like a super smart way to do it. And it's a way that I think will keep most people out of trouble. Again, nothing is guaranteed, but that seems to me like for 99% of people, probably the best option.
One of my final questions, I know you're a big Ethereum guy. Do you think Ethereum eventually flips Bitcoin? And do you think Ethereum will be flipped by an alternative L1?
It's a really interesting question. I think eventually Ethereum comes close to flipping Bitcoin. However, the reality is that Ethereum has something that every other L1 wants, which is trust. And they've earned it, and they now have something that every other L1 wants as well, which is environmentally friendly greenhouse emissions. In the end, it's really hard to predict what the ultimate winner of the L1 race is. But I do think that Ethereum is an asset that will grow indefinitely forever, as long as crypto grows. I think that it is the highest risk adjusted return asset. Like if I was going to put most of my money DCAing, I would put some into Bitcoin. I'd put more into Ethereum because I believe strongly Ethereum is going to come back with the market. And I think it's going to do higher gains than Bitcoin. And so that's the way I see it. They're both the two safest. And Bitcoin, definitely there's a chance that Bitcoin becomes like some adopted global monetary system at some point. I think it's pretty far off, but there's a reason why everyone still buys Bitcoin. And so it'll come back. Right now. The narratives are far stronger a little bit around ETH. And if ETH starts to become deflationary, that's quite interesting.
Give us your best piece of alpha for our Altcoin Daily audience. What do they need to know?
You need to know that Aaron and Austin are Chad Kings, and that you should be watching them each and every day. And you should subscribe and put that bell notification on, because if you don't have it on, you're just not going to get all the videos, and that's sad. So watch Altcoin Daily. You guys are doing amazing work each and every day. And content creators, at least for me, got me through the last bear market, being one, as well as watching them. And so I think you're doing very incredible work here, and keep on fighting the good fight, and we'll get through it together.